January 25, 2018, Grantsville, Utah. A heavy commercial truck cruises down a remote desert highway. The corporate promotional video broadcasts functional zero-emission technology to millions of global investors. The entire demonstration was a physical lie, manufactured by a localized camera angle. The vehicle possessed no hydrogen fuel cell. It possessed no motor. The multi-billion-dollar prototype was simply rolling in neutral down a 2-degree geographic incline. The architect of the illusion was Trevor Milton. He recognized a fatal vulnerability in modern venture capital. The market no longer demanded physical engineering. It only required a highly optimized media narrative. By taping over third-party components and claiming them as proprietary, Milton weaponized the retail investor fear of missing out. He discovered a perfect structural loophole. In a financial system built on theoretical valuation, you can build a $34 billion automotive empire without ever building a functional car. You just need a long enough hill. To sustain this massive corporate valuation against federal regulators, Milton targeted a profound systemic vulnerability. The blind spot was the Special Purpose Acquisition Company, the SPAC. In a standard public offering, compliance teams audit every piece of underlying technology. A traditional IPO forces a company to prove its past engineering. A SPAC merger bypasses this friction entirely. It allows a private entity to market itself strictly on future financial projections. The administrative logistics were flawlessly deceptive. Milton utilized high-end computer renderings. He presented these digital concepts as physical inventory. When retail investors looked at the corporate reports, they saw state-of-the-art hydrogen stations and manufacturing pipelines. In reality, the entire corporate infrastructure existed only on hard drives. To the global financial elite, an entirely theoretical company had been legally transformed into a revolutionary automotive giant. The architecture of the deception sustained itself perfectly. The stock price skyrocketed, making Milton a billionaire on paper. The system finally shattered due to a localized geographical investigation. The arrival of a forensic short seller. In September 2020, analysts at Hindenburg Research published a devastating dossier. They did not just read the financial ledgers. They cross-referenced the exact GPS coordinates of the corporate promotional video. They traveled to the specific stretch of highway in Utah. The researchers measured the physical slope of the road. The math completely collapsed the corporate narrative. They proved the truck was not driving, it was falling. They discovered that a publicly traded automotive giant was sitting on an empty ledger of manufactured assets. The revolutionary hydrogen inverter was just an off-the-shelf component with a piece of tape hiding the original brand name. Trevor Milton had accidentally left a permanent digital footprint detailing exactly how a non-functional shell was pushed down a hill. The exposure of the Nikola fraud triggered an immediate systemic collapse across the retail stock market. It completely destroyed public faith in the SPAC framework. When the true scope of the phantom engineering fractured the public trust, the corporate board forced Milton to resign immediately. Major automotive partners panicked. Massive manufacturing deals evaporated overnight. The macroeconomic devastation left retail investors saddled with massive portfolio losses. The United States Department of Justice bypassed civil penalties, launching a full criminal indictment. Milton stood trial in a federal courtroom. He was unable to deny the physical evidence of the unpowered truck. He was convicted of multiple counts of securities and wire fraud. The Nikola scandal permanently altered the regulations of alternate public offerings. It forced the Securities and Exchange Commission to implement rigid verification protocols for forward-looking statements. It proved that the ultimate vulnerability of the modern financial framework is a global trading system that treats rendered computer graphics as a substitute for physical reality. It left behind an enduring rule for modern markets. If the media push is aggressive enough, a single operator can sell an empty shell to Wall Street, right up until gravity runs out.